Hi, welcome back to another video from DW Augusto Tax Planning. Today we're going to talk about what expenses you might be able to deduct on your personal, family, married, filing jointly, whatever, individual, non-business income tax return, normally on a 1040. The first most common document we see is a mortgage form 1098, a 1098. The mortgage company reports the interest you paid on your mortgage, possibly PMI insurance on your mortgage, possibly also property taxes. We take that information and see if you might be able to itemize deductions. If you have a mortgage of more than $750,000 on a property, your mortgage interest will be limited. The next item is charitable donations. If you have cash or item donations like Goodwill, we will want to have that information just in case you can itemize it on your Schedule A. Cash donations do require a receipt in the event of an audit, and item donations, if you donate more than $500 per year, you need to have receipts and give us a little detail like 3 bags of clothing worth $125. The next is sales tax or state income tax. If you are in a state that charges income tax, then we'll automatically have that information from your W-2. But if you are paying sales tax or state tax in some other form, you might as well send it to us. We might be able to use it. If you have children who are in child care, you need a document from the provider that includes the provider's name, address, the child's name, the total amount paid in child care for the year, and their tax ID number. This also counts if you have a child who goes to, say, summer camp. As long as you are working and it's not an overnight camp, you can still deduct it. You'll still need the same information that I listed just a moment ago. Next is if you have a small business, whether that's a sole proprietor or you're a single member LLC with a Schedule a Schedule C deducting your expenses. We need all of your expenses. We have a form on our website that you can use to help you determine what expenses you should be looking for. We also can use QuickBooks. If you have an accounting program, let us know if you have any questions. If you are a teacher and you pay out-of-pocket expenses for your job, for your classrooms, you can deduct up to $300. Please keep receipts. We don't necessarily need to have them, but in the event that you get audited, it would be important to have those receipts. Next is student loan interest. If you have paid student loan interest, your provider probably provided you with a tax form in January. It would be great to have that form so that we can get you a credit if you are allowed to have it. Moving has been removed from most tax returns, moving expenses, even for people moving out of state, unless you're military. And there are some limited instances in which an active military individual who is making a permanent move under orders, they might still be able to deduct their moving expenses. Last on this list is healthcare savings account, an HSA. Sometimes you have this through your employer and they provide some forms for you, or you're handling it on your own and you're making after-tax deposits. We need that information to determine if you can get a tax credit at the front or the back of that contribution. HSAs are wonderful vehicles. If you're not using them and you have one available to you, we highly recommend that you do. It is one of the few one-for-one deductions that the IRS allows. If you have any other questions or any other special items that are affiliated with your account, just let us know. Thank you.